What's going on, guys? Welcome on into today's video. We are talking about how to sell puts on Robinhood and what the heck does that even mean. So we are looking right now at Palantir. We're going to walk you through what you need to know when it comes to selling a put, and let's break it all down. So when it comes down to it, we are looking right now at Robinhood and a stock, for example, Palantir. Let's say that I wanted to buy Palantir, or I think that I could make money because Palantir has sold off a lot. Let's say over the past, week, month, year, whatever, and a lot of people are buying puts, and so I want to potentially make money off of those elevated premiums for puts. I could sell puts, and I could also go long Palantir by selling put. Let's walk you through. We already have a video covering covered calls. If you want to see that after this video, I highly recommend checking it out. It's already up here on the channel in the Robinhood playlist, or it was the most recent video if you're watching this video when this video comes out. Okay. So Palantir, let's just say we want to sell a put for Palantir. Like, what the heck does that mean? Like, how do we do this and walk through? Okay. So I'm going to go to the option chain right now on Palantir, and I'm going to go to, let's go out to like October 21st. I don't know, for whatever. When I'm filming the video, it's mid-September. Let's go out to like mid to late October. Okay. Palantir sits at 777. I might say to myself, hey, Palantir is a stock that I want to buy and hold for the next 5 to 10 years. I don't care what happens tomorrow, this week, next month. I want to buy this one. I want to hold this one for a long time. Great. I'm going to then sell a put. And when I do that, I'm going to get paid a premium. Now, you could sell puts for a couple of reasons. One is that you want to buy the stock at that price, at the strike price that you sell a put at, and you want to get paid to do it. Or you could look to sell puts because maybe everybody is buying puts. The stocks are plummeting. Everyone's buying puts, and you think the market or this stock will rebound before the strike price or before the expiration date of this option, right? So you will then go ahead and sell a put around the strike price. Most are going to sell puts that are potentially below the strike price. We're looking at calls. Let me go over to puts. Below the strike price. Why? Because if I think that Palantir is going to bounce at $7, and I don't think it's going to go below $7, I could sell this $7 put for 30 cents, which equates to $30 per put that I sell into my account. And if Palantir finishes October 21st above $7, I just made $30 and I didn't have to do anything. Nothing happened. Okay. Or maybe I like Palantir. I say, hey, I'll own Palantir at $7. I'll sell it at $7. And if by October 21st, Palantir finishes that day, that Friday afternoon, underneath, let's say it finishes at $6.99. Okay, fine. I have to now buy my Palantir. I have to buy 100 shares of Palantir, 100 shares per put that I sell. I have to buy that, okay, at the strike price I sell it for. Okay. Now, I recently did this with Palantir. I think I made about $15, something like that, by just waking up on a Monday, not waking up, but just on a Monday morning, coming into my portfolio, seeing that Palantir was getting beaten down. On Monday or Tuesday, it was down in the low sevens, and I said, you know what, I'll buy Palantir this week if it finishes under $7. So I sold a $7 put, and then Palantir finished at like $7.50, and nothing happened. I made $10, $15, and it was just extra cash flow. That's what I did. So if I want to do this, you need to make sure you have the money to actually buy 100 shares. So if I go through, let's just make sure I have this. If I go through right here, click on this sell put, not buy, sell put, and I go to the $7 puts. I pull it up right here, make sure it says short put, okay? Short put, continue. It will then tell me, let's see, I have $981 of buying power available. So I can do this. Now, why? Because Palantir is at $777. So to do one of these, to sell one put, I need to have $777. Well, actually, no, only need to have $700 because if I buy this put, it's going to be at the $7 strike price. I'm selling the $7 put, meaning that, hey, if Palantir finishes under $7, I'm required to buy it at a $7 limit order or limit price, right? Or price, okay? So I will go through and it will then essentially kind of walk me through my max loss, max profit. Now, in a case of selling puts, this is nice because you see your max loss down here? It says negative 671. Why is that important? How does that make sense if I'm buying at $7? Well, because I'm getting paid $29 in this case to sell this put, if Palantir went to zero and I never sold the stock before it went to zero, Worst case scenario, I only lose $671 rather than $700 because I sold the put. So selling a put can help bring your average down. It could be just a form of cash flow if the stocks never actually finish below that price. And it's something that you could do on stocks that you want to hold anyway and say, hey, I'll do it anyway. And it's something that's useful. It's a different style of options trading, but it's not going to be kind of like your 1,000% gainers on, oh, I think Palantir is going to go up or down, I'm going to buy calls or puts. It's not that, but it's probably one of the easier or less risky ways to get into options trading, to start understanding how this stuff works, to start getting some experience, getting your feet wet with trading options. I highly recommend if you get into things or you get into options trading, you start here. So I'd go through, review my order, and submit this if I would like to. Make sure you either select good for day or good till canceled. Again, good till canceled means it's not going to cancel until the option expires. Okay, we get past October 21st, or you go in and cancel it in 90 days, before 90 days. So one or the other. And for me, I like to do it good for day and say if I get filled, I'm watching it right now, I want to get filled today. And if I don't get filled today, I'll reset tomorrow, see where the market's at, see what happens, and assess, and then do what I got to do tomorrow, right? So that's how I'll do it. And again, you'll go through, click on review order and click on submit, and you're good to go. So that's how you sell puts on Robinhood. If you have any questions, leave them in the comment section down below. Like always, got a ton of other videos on the channel covering a lot of Robinhood tutorials, Webull tutorials, plenty more where that came from. Check out our awesome playlists, tons of great stuff for free. And speaking of free, there's a free webinar covering 3 trading signals linked in the video description box down below if you want to check that out as well. Thanks so much for watching, guys. Thumbs up button, consider subscribing, and we'll see you in the next one. Peace.